So good morning, everybody. My name is Nicki Parr. I'm the Associate Director for Strategic Initiatives at WEV. I'm also a Business Recovery Specialist at WEV. Hopefully some of you have been on the last couple of webinars that we've been doing to address small business issues during COVID. I'm going to be joined this morning by Laura Azzalina Rigali. She is the founder of Illuminate CFO. She is a CPA, a financial consultant, and an excellent explainer of all things financial. I want to be clear that the first hour will be Laura giving you strategies for financial management during this period. The second hour, we will be addressing the CARES Act, and I know there's a lot of questions already about PPP. And the Eid L, and we will get into that in the second half of the webinar. So I'm now going to hand over to Laura and just give us a second as we share screens and make that transition. Okay. Laura, are you able to share your screen?
Yes, yep, absolutely. Okay. Oh, it says host disabled screen sharing.
Okay, so we had this last week, didn't we? I need to change that and that. Okay, over to you.
Great. Okay, perfect. Can everyone see my screen? Yes?
I can see it, so okay. That's good enough.
Okay, great. Perfect. Well, good morning, everyone. Thank you for joining. Nicki, thank you so much for having me. I'm looking forward to talking with you guys today. We're going to cover a lot of information, but I'm going to try to get through it in a concise manner and then leave plenty of time for Q&A at the end of this so we can address your specific questions. Before we dive into the content that's prepared, I would love to hear from people if there's any specific questions or concerns that you'd like to make sure we address, or you could even share what business you're in and what issues that you're facing. If anyone's brave enough to speak up or put it in the chat, and maybe Nicki, you can help me field some of those comments, that would be great.
Yeah, there's already some that are going to be relating to the CARES Act. So, you know, we can touch on that a little bit. I think Laura will touch on it in this first hour. Definitely in the second hour, we'll get into more of the specifics on that.
Okay, sounds great. Anyone else? Anything other than the CARES Act?
Trying to figure out burn rate for cash reserves on hand. Is there a formula and a way to prioritize payables? It is impossible to make commitments to our tenants for rent relief because we don't know if when the $10,000 quick grant or any forbearance will be forthcoming. So yes, definitely looking at how to manage cash during this period.
Okay, great. That's very helpful. We will definitely cover that. If anything else comes through, just feel free to interrupt me, Nicki. I'm happy to hear comments. So I'm going to move forward just in the interest of time. So these are the things we're going to cover today. 5 steps to thriving during this period that we're in and hopefully beyond. Embracing change, which is very difficult, I know, but a necessity for figuring out a plan and moving forward. Understanding your financials, which is where we'll spend the bulk of our time. Shifting your business to current needs as much as you possibly can. Not disappearing from your customers during this time, and most importantly, not withdrawing from yourself or from your business or from your social networks, because that's not healthy for you or your business, and we need you to be healthy and effective as a business owner, even though that's a challenge right now. So let's start with the first one, embracing change. We know that we are in different circumstances today. They are not necessarily happy circumstances, but I want you to try to view this as business as usual. And let me preface that by saying, I know this is not entirely business as usual, but as a business owner, as an entrepreneur, you face these types of surprises and bumps along the road all the time. Maybe not to this national global extent, but certainly unexpected changes. You may lose key employees, you may face regulation changes that happen without your willingness or consent. You might face, competitors moving into your your block on your street or your marketplace, or however you want to define that. You face these things all the time as a business. So as much as you can stay in that mindset of, I've handled unexpected change before, I can handle it again, that will serve you very well. You know, obviously today, the title of this is trying to eliminate your money anxiety. And so much of what we're facing is uncertainty about the future. And that fear can be very crippling and can kind of just freeze you where you are. So as much as we can try to manage your reaction to what's happening by convincing ourselves, and this, you know, we're not lying to ourselves, this really is the truth. It's one other change that you have to deal with, that you have dealt with many things like this before in the past as a business owner. Try to manage your anxiety around that and really think of, this is business as usual. I can do this. I've done this before. That will serve you very well. I want to make a shameless plug here for a strategic plan, because a lot of times these types of circumstances highlight challenges that have existed in our business already. So dependence on one source of revenue over another, not having cash reserves. And unfortunately in this region, business owners have been hit year after year with really extreme circumstances, right? Extreme crises that you guys have faced more in a short period of time than any business owner should face over their lifetime. So I want to preface this by saying this is unusual, right? In that regard. So you might have had cash reserves at some point in your business, but you haven't been able to build them back up. And now we've hit you again with this environment, which is very difficult to compete in. But we need to get to a place in your business. If it's not today, we need to be working towards that in the future, of you having some resilience, right? Having some ability to withstand these things, because it will always be something, as I was saying. It might not be COVID-19, but it could be something else that has a strong impact to your business that's beyond your control. And so we need to have some sort of cushion that allows you to withstand that. That's a goal to work towards. So again, not something we can fix today, but I want you to be thinking about how much of this was already possibly existing in your business. Did you see glimmers of issues that maybe you overlooked or, you know, tried to explain away, that you could get in front of in the future? So as much as you can put yourself in that future state, that will really help. Okay, let's talk about your financials, since I think this is where the bulk of our questions are this morning. Obviously, we need to look at cutting expenses. I want you to think about your fixed expenses on your income statement, and we're going to look at an income statement in a minute. Your fixed expenses versus your variable expenses. So variable is what fluctuates based on how much you're producing. So I know we probably have a lot of service businesses here this morning. So service business, your production is your employees, right? Your payroll hours. So if you think of, in order for me to continue selling, those variable expenses are also going to continue existing, right? Or else it means we wouldn't have sold anything. So variable expenses, we can try to trim and streamline our process for producing that revenue as much as possible, but there's not too much you can do about that. What we want to look at more in the short term is our fixed expenses, those fixed monthly overhead expenses that don't necessarily have to do with producing your revenue, but have more to do with maintaining the other aspects of the business, right? So rent expense, marketing expense, payroll for non-manufacturing or non-client facing employees, insurance policies. Those are the types of things. Monthly subscriptions. So this is a great opportunity to look at all of your dues and subs that maybe just hit your credit card every month automatically. Go back into all of those and cancel the ones that you can. Those are such easy ways to save cash, and they really add up. It might seem like, you know, $100 here and there, but that adds up very quickly. So look at all of the monthly things that you spend regularly that maybe there's a way for you not to spend. And this is also, again, if we think of business as usual, this is where we tend to creep up in our expenses pretty quickly without noticing. And then it becomes just a monthly burden that we carry. So these efficiencies might have existed before today, and it might be a great opportunity for you to save money, you know, indefinitely into the future. These might be expenses that you never really needed in the first place. It's really important to watch your financials. If you don't do this already, it's really important in these current circumstances to look at your financials every week and every month. So not only does it give you a sense of control, because again, today we're talking about managing anxiety, and that anxiety often comes from not looking at the things we know we should be looking at, but maybe it's too scary to look at, so we tend to avoid it. it's really important that you face that head on and just look at where things are, because the closer you are to your numbers, the faster you'll start to notice trends and the faster you can make decisions if you need to. So we're going to look at your income statement next and talk about those accounts. And I want you to be looking at your cash flow as well. And I'll show you a template for creating just a really simple cash flow forecast that you should be doing every week so that you can start to see trends and notice when you might feel some crunch in your cash flow if you're not at the worst part yet. See when it might get to that stage. And the further out you forecast, the longer you have to make that not come to a reality, right? The more options you give yourself, the further out you are looking and planning. I also want you to think about something called break-even units. I'll do a quick calculation of that just to introduce the concept to you. Break-even basically means this is the sales level at which your expenses are covered. You're not making any profit, but you're not making any loss either. So you're neutral. So in circumstances like this, it's really good to know how much your revenue can reduce for you to still be okay. Obviously, it's not where we want to be, and you are probably seeing a shrink in revenue. So how much further can it go? Or are you already at your break-even point? How much further can it go for you to be neutral, right? Not making profit, but not making a loss. And what can we do to improve that point? Because there are some changes. So here's a classic income statement. I'm not sure how many of you spend time looking at this, but we'll just breeze through it pretty quickly. And I'm happy to come back to this afterwards and take questions, of course. So sales, of course, this is our happy number. This is what we're selling to customers. We want this to be as high as possible. Cost of goods sold, this is those variable expenses that I was talking about a few minutes ago. So this is what fluctuates based on how much you're selling. So if you're selling more, this number is going to be higher. If you're selling less, this number will be less. The difference between those two is called your gross margin, and this is the most important number on your income statement. So this is the profit that's left over after you produce your product. This is what's left over to cover all of your other fixed expenses, those overhead expenses like wages and marketing and rent and insurance. So you can cut back those fixed expenses as much as you want, but if the gross margin isn't high enough to cover them, it doesn't matter how much you cut back on marketing or rent because you're not squeezing enough profit out of your manufacturing process. So again, this is not necessarily something you can change in the short term, but as you're pulling yourself out of this and planning for the future, I want you to be looking at your variable expenses and the price that you're charging your customers and determining, am I charging enough? Am I being efficient enough in my manufacturing or in my delivery of this service to earn enough profit out of what I'm doing, right? Work smarter, not harder. And that's maybe a conversation for the future more than today, but it's very important if we look at your overall profitability and how quickly you will be able to regain and maybe even exceed where you were before. The next section, the bottom half of that income statement, is your fixed expenses. So these are the things that we can cut in the short term very quickly. Obviously, we can try to get out of a lease if we need to. We can renegotiate insurance policies. We can cut marketing expense, even though we need to be smart about that because you still do need to sell. So maybe it's just a matter of changing your strategies. Maybe it's eliminating a fixed retainer for SEO management or a fixed retainer for marketing strategy, and instead you go to an hourly basis, just as a more kind of short-term strategic use of funds. All things that you can look at to trim expenses. This is where you're going to save the most money in the short term. Then of course the difference between that is your net income. This is what's left over to pay you as the owner of the business. This is what pays your debt payments and the savings that you have to reinvest into the business. So happy to go back to that to answer any questions once we get through the rest of what we want to cover here this morning. So break even, I don't want to spend too much time on this to overload you guys with detail, but I just want to introduce this concept of how to improve your break-even point. How to improve your break-even point. So those variable expenses, if we use a cup of coffee as an example, and if you're a service-based business, we would use this, we would use 1 hour that you're selling to your client. Right? So the revenue is what you charge to your client. So it would be the billable rate that you're charging to your client if you're a service business. If you are, if we're talking about this cup of coffee, it's the price per cup of coffee. The variable expenses are what makes up that cup of coffee, right? So the beans, the milk, the stirrers, the disposable things. If you're a service business, this is your payroll. This is what you pay your employee. So the difference between those two is the profit that you squeeze out of every unit you sell or every hour that you sell to a client. We compare that to those overhead expenses. So in this example, I'm going to say $10,000 a month for rent of your retail storefront, salaries, insurance, maintenance, etc. If you divide that $10,000 fixed expense by the profit you're getting per cup of coffee, that means you need to sell 5,000 cups of coffee to cover those fixed expenses. So now we have to figure out if that's too high or too low, which is where probably a lot of you might be feeling the pinch right now is, okay, if my sales shrank immediately and I still have this $10,000 burden, how can I make that better, right? How can I make that number better? Instead of 5,000 cups of coffee, how can I make it so that I only need to sell 3,000 cups of coffee a month, right? It's a lot easier for me to reach 3,000 than 5,000. So first, we look at those fixed expenses that I talked about. So cutting your rent expense, cutting your payroll, cutting your insurance, that's the easiest place to start. Then you have two other places you can look, which is the variable expenses. So can I get those coffee beans for cheaper? Can I buy in bulk to get a better rate? Can I buy my disposable cups in bulk? Can I use a different distributor? And then you can look at the retail price that you're charging your customers, which is really where we want to go last, of course, because customers can only handle so much price increase. But these are the three places you have to look to improve your profitability overall. So I know this is maybe a discussion a bit for the future, but you have to be thinking about it today because there may have been profitability issues in your business already that caused you to have to be impacted so strongly by what's happening today, right? So they kind of go hand in hand. Once you understand this concept of break even, you have everything you need to run a profitable business and to maximize profitability in your business going forward. So it's a really powerful tool. And you can also think not just in terms of the total business, but in terms of every revenue stream that you have. So think of which customers are the most profitable, which product lines, which business units, which geographies are the most profitable for you to serve. And once you understand that, then you can pick and choose and again, work smarter and not harder and only work on the things that give you more profit, right? Why would you spend your time working harder for something that pays you less? So it really empowers you to custom build from the bottom up the most profitable business model for you. So again, something to think about today and for the future. Okay, so let's talk about planning some cash flows. The next slide here, I'm going to show you a cash flow template, and I'm happy to send that around, or Nicki can send that around to you guys so you have this to work on after the webinar this morning. I want you to look at the cash that's coming in every week and the cash that's going out. So the cash that's coming in, of course, is anything that's in your receivables currently, and then any new sales that you expect. Changes to your revenue pipeline are something you're going to have to consider. If you haven't felt them already, I want you to do some scenario planning. I'll come back to that in a second. So cash that's coming in is your revenue. Cash that's going out would be all of your expenses. So the variable expenses to produce that revenue, whether that's your payroll per hour or the direct expenses to produce that cup of coffee, and then the fixed monthly expenses. So rent, marketing as much as you still need to spend that, and insurance. What are the essential things that need to go out every week? And then think of debt payments, although there's some opportunities to defer that stuff, which we'll talk about in a second. But plan week by week, the ins and the outs, and you'll start to see where it's going to get tough. And as I was saying before, the further out that you can plan and estimate, and of course, everything is a guess, the further out you look, but if you can create some expectation, it allows you to control the outcomes a bit more. So I have this in bold here because I really want to stress this point. It's important for you to create some scenarios. We have to do a best case, a worst case, and a base case. So best case meaning there's no impact to your revenue. Everything comes in according to plan, and it's like business as usual, which is great. Base case is maybe if you lose some revenue, and what would that look like in terms of what expenses you can cover. Worst case is, of course, you lose a ton of revenue and you still have to cover these expenses, and how do you make that happen? So again, because we're talking about eliminating anxiety, I want to stress this. It's really important to plan for that worst case on paper, and let's hope that it never comes to reality. But not thinking about it and avoiding it is what brews this anxiety that is so crippling that it prevents you from using your brain for creativity and for planning for the future. And that's really not effective for you as a business owner or as a person. So write it down on paper, think through it on paper. And once you've faced it head on, it will stop having so much power over you, and it will allow you to use your brain for something better. So again, plan out these scenarios, plan out the worst case, figure out how you will need to adapt and make some choices. And that will be a really powerful anxiety management tool, in addition to obviously a financial tool and a cash flow tool. So these next 2 points might not be something that we have today, but it's important for us to work towards this for the future of your business. So as a business, you should have 2 months of fixed expenses set aside. If you can't get all of fixed expenses like rent and insurance insurance policies and marketing, you should at least have 2 months of payroll covered for situations like this. Again, this is oftentimes really hard for small businesses to achieve, but we have to get you to that point at some point. If it's not today, we need to get you there so that this type of situation does not immediately impact you as drastically as it might have today. This goes for personal spending as well. So 2 months of living expenses on reserve. And if you think of your own personal financial planning, half of your income should be going to these living expenses, like your mortgage or your rent and your food and your car payment. And the other half should be for your savings and for your retirement. Again, you might not be there today. It's something important to keep in mind for the future because we don't want to be living on the brink all the time. This is a stressful place to be, right? We want to have some comfort and some security, and that should be an important goal for you, if for peace of mind, if for nothing else, right? You can choose to spend the money however you want. You don't have to have it for retirement if you don't want. If you want to work forever, that's okay. That's wonderful. But at least have some cushion, right? We want to be giving you choices, which is the point of all of this. So here's that cash flow template that I mentioned. Really simple weekly format. You can plug in all of the cash ins, all of the cash outs, other things like taxes, debt payments, your distributions as an owner, and this will show you the net cash that's expected every week and where you might need to make some choices. I also want to bring up the concept of a dashboard. These are the key metrics that will create those cash flow outcomes that you're looking for. So if you think of how many sales do I need to close every week in order to generate that cash flow, which means what do I need to be doing to create those sales? So this is a behavior tracking tool, essentially, to make sure that you're focusing on the right things that are generating the outcomes that you want. There's all sorts of other metrics on here that are maybe a little bit less timely given the circumstances that we're in, but planning for the future, you can look at balanced scorecard metrics, environmental impact. It's a way to run your entire business and achieve your entire financial statements based on activities that you can track every week. So key performance indicators. So again, this template, I'm happy to send this around so you guys have that. I really want to encourage you to use this time wisely. It's a scary time for a lot of people, but it's also a great time to step back and think about your business. So again, if you look at the profitability of certain projects and customers, are there things that you can be doing differently going forward, right? Because we're dealing with crisis management today, but we really have to adapt to today and have a plan for the future. I strongly encourage you guys to be thinking about the future state. And I'm going to talk about that in a few minutes, but we need to have a plan for your business to come out of this and to be a stronger business than it was going into it. Wouldn't that be amazing if we could use this time as a lesson in maybe some of the challenges of our business model that we didn't notice before, and now have a plan to overcome those and be a much stronger business? Wouldn't that be wonderful? Wouldn't that be such a great silver lining and something to look forward to? So use this time to evaluate which types of revenue make the most sense for you. Where do you make the most money? What's your dream client that you could sell to really easily and charge a high profit for and find 20 more of them, right? How can we basically print money for you as a business? That's something that we want to figure out. Even if you can't execute that right now, we want to know what that future business looks like for you. It's a great time to create passive income if you are a freelancer or a sole proprietor, someone who creates content or could create content. Think of podcasts, ebooks, courses, blogs, things that could be monetized that you could spend time now creating content that would basically just come to you as passive income in the future. Think about diversifying your revenue. Again, if you are taking more than 10% of your revenue from any one customer or any one source, that represents a risk in your business that we want to try to get you away from. And obviously the risk is when that goes away, or if that goes away, you're left with a huge revenue loss. So as much as you can try to diversify the customers that you work with, sometimes that takes just a little bit of time to build your pipeline out. Now is a great time to be thinking about what that pipeline could look like. So having a plan to diversify your revenue. Okay, as Nicki said, the second hour of this webinar is going to be focused on PPP and CARES Act, so I won't spend too much time here, but I want to just highlight a few resources that you probably all are aware of already, or if not, it's a great time to start applying for these things. So Payroll Protection Program covers 2.5 months of payroll and fixed expenses. Apply through your bank. This opened up on Friday. A lot of banks are already maxed out on what they can process because, as you can imagine, their systems have just been flooded started and they don't really have the resources to manage all these loan applications. So a lot of people are finding alternate banks to apply to. I'm sure Nicki has amazing resources and recommendations for you guys, so I won't spend too much time on that. But this is basically free money from the government. It can cover 2 months of payroll. If you use it for payroll and fixed expenses, you don't need to pay it back. The challenge at this point is going to be getting into a bank that is able to process your application. So that's something that we need to find a solution for. There's also disaster relief loans if you apply through this website. This does need to be paid back. It's for companies that have experienced a significant loss of revenue. You can also defer your payroll taxes through the EDD. So if you are only able to cover your gross wages debit from your account right now, you don't have enough cash flow to cover your taxes, call the EDD. Basically, you just have to provide a written statement of the impact that COVID-19 has had on your business, and they will allow you to defer your payroll taxes up to 60 days, which is great. In some instances, they might also just give you a total credit on a portion of your taxes, which is even better. So definitely apply for that. Stimulus checks, as we all know, are coming out at some point. A quick note here, if you think that they're going to use the most recent tax return on file. So these are the limits that are going to qualify you for the maximum amount: 75,000 adjusted gross income if you're single, 2,400 if you're filing jointly married. If you feel like your 2018 numbers are going to be lower than your 2019 numbers, hold off on filing your 2019 numbers so that you can qualify for the full stimulus based on your 2018 tax return. You can also look at just some other funding sources. If you want to apply through your bank for just a traditional loan, it's a great time to do that because rates are very low. And I'm not sure if the lending process is easier or worse based on the crisis loans that are going through the PPP, but it's maybe worth considering. I'm sure Nicki can give you guys some great advice on that.
Laura, can I just jump in with a quick question? We've had a few questions that relate to cost of goods sold for service businesses. That's one of the questions on the Eid L application. Do people just put 0 in that line and then just cover the fixed overheads?
Yeah, so this is tricky. I think if you have not done this in the past, my hunch is you want to eliminate as many questions as possible in the application process and make it as streamlined as you possibly can. So it's like a check the box, rubber stamp, you're approved type of thing. So I would put whatever has been on your financials, because you'll probably have to show that, and your tax returns as well. I would show whatever was on your financials. Going forward, for your own benefit as a business, you need to put your payroll for the client-facing employees in cost of goods sold, because that's the only way that you'll be able to measure whether you have a healthy enough margin, whether you're marking up your payroll enough to cover the rest of the expenses in your business. So that's kind of a two-part answer. My recommendation, and again, no one has actually been approved yet for these loans, so we are all just guesstimating. We have no idea what they like or don't like. But my experience with applying for loans is you want less questions and you want more things that tie out very nicely. So I would use whatever is in your existing financials, whatever is in your most recent tax return, structure it the same way. Because they're also going to ask for payroll records, and that's really what they're going to build your loan off of, right? They don't really care whether it's a cost of goods sold employee or an overhead employee. They just don't want people to get fired across the board. So they're trying to prevent unemployment, right? So they don't really care how you categorize that person. They just want to cover the payroll. That's my best answer at this stage, because no one has seen yes or no what banks are approving and not approving.
Okay, thank you.
Yeah, absolutely. Okay. Just a few words of caution here. Again, if there are profitability issues in your business and you have had cash flow issues in the past, a loan that fixes your payroll is not going to fix those past problems. So it's really important for you to identify what they are. And if you do take out an emergency relief loan, use it for its intended purpose and don't use it to pay off old debts or old expenses or old lessons learned, to put it nicely, about maybe things that didn't work in the business. So just a word of caution there, because it will be very difficult for you to get out of those debt payments. Even though they're very favorable terms through the SBA, we don't want your business to be crippled under debt if you don't have cash flow and didn't have cash flow to begin with to cover these types of payments. So it's something you need to spend a little bit of time looking at. This is also a really great time for unethical people to come out of the woodworks and try to take advantage of desperate business owners. So be very mindful. If you do submit any applications, make sure it's through a legitimate source. It should be through your bank or a bank that you know of, or the SBA. It's very common to apply for online cash flow loans right now. Do some research and make sure that it's legitimate. Don't give your information away to people that are looking to take advantage of you. You can check in with your insurance policies as well. I know this is kind of a leap, but some policies might cover what's happening right now. So it's definitely worth talking to your insurance broker and at least having a conversation about it. Next is taxes. As we all probably know, taxes have been delayed until July. I would strongly encourage you to calculate your tax liability now, even if you don't plan to pay until July, because we want to know what your cash flow responsibility will be, right? Again, we're trying to eliminate as many unknowns and sources of anxiety as we possibly can. So don't have that uncertainty lingering over your head. Write out your returns, know what the ending number is, and at least you have it for your planning purposes, even if you don't plan to pay. There are always payment plans available with the IRS and with the EDD if needed. So, and State of California Franchise Tax Board if needed. So keep that in mind. Of course, it comes with interest, but it's better to know that you have a plan in place than to find out the hard way that you don't have a plan and there's some penalties involved there. Most importantly, ask all of your vendors for delayed payments, deferred payments. Basically, everybody is doing this, no questions asked. So call your rent, call your mortgage company, call your car payment, insurance payments. Basically, everybody you can think of that you pay. Utilities, everybody is allowing deferred payments. They've basically been told they have to. And a lot of them won't even ask you for your circumstances or scenarios. They'll just say, we've noted it in your file. Call back in 60 days. So definitely take advantage of that if you can. A lot of them are also offering grants. I know Verizon is offering grants, so that might be something to look into for applying to, which would eliminate your obligation altogether. Also be sure to ask, even though these deferrals may be granted, just for your peace of mind, make sure you ask whether it has any impact on your credit, because we don't want them to say, sure, you can defer it indefinitely, but we're still going to report you for missed payments. That wouldn't help you very much. So ask for that as well. Okay, if you are a solopreneur or a contractor or a freelancer, there's some great news here. So you now qualify for unemployment, which is something you have not qualified for in the past. It's called pandemic unemployment. The EDD does not have anything on their website yet, at least as of last night. They didn't have anything. It basically says, we know we're going to offer this. We're working on pulling a program together. Check back with us. So keep that in mind. It's $600 a week through the end of the year. If you were a W-2 employee who lost your job, don't apply for pandemic unemployment, apply for regular unemployment because it could be higher than what you would get through pandemic unemployment. So you can do that anytime. You can log into the EDD website, create an account, list your previous employer and your payroll amount and get that process going. So you don't need to wait for pandemic unemployment for that. If you believe that you are misclassified as a contractor and really think that you are an employee, apply for traditional unemployment. Again, don't think about the pandemic unemployment. Try to go for the higher amount, which is the traditional unemployment. A word of inspiration for freelancers. I know that this is a really scary time and a lot of people think that they're losing opportunities here, and you may lose some of your pipeline, but it's also a really great time for freelancers because most people are afraid to make full-time hires right now. So that means they need you. They need fractional people. They need people that they can pay for part-time work. So you might need to cobble together your income based on more sources than before, but there's actually really strong needs. So think of, you can reach out to companies directly. You can use recruiters and staffing firms that staff, weekly contract employees, and also go through online sources like Upwork and Fiverr. I know sometimes those rates are not as high as they would be in other sources, but it's a great way just to, get income from as many places as you can think of. There is a strong need for you right now. Okay, number 3, shifting your business to current needs. So obviously we want to look at your existing customer base first and think, how can I make myself relevant for them? What do I need to be doing right now? Everyone's competing for dollars. So your product or service might not be top of mind. It might not be what's needed most, but we want to get in front of that as much as possible and have a conversation with your customers. Call them up and ask them, how can I continue to support you? What do you need? It's better to have less revenue from them than no revenue from them, right? So do you need to offer different offerings on a different timeline, reduced scope, different price points? What do they need now that they didn't need before? And this is also a great place to look for opportunity of new types of service offerings, right? What do people need now that they didn't need before? Do my current customers not need me, but maybe a new type of customer does need me? Great source for innovation, but try to have that open conversation with your customers as much as possible. It's really important. Now I want you to be thinking about the long term. Again, as I've hinted at throughout this, we know that we're dealing with a crisis today, and we need to take some action for you to take control of today. But really what we want to be using your brain power on is, what does my business need to look like in the future? Because we don't know how long this mandate is going to be in place, but even when the mandates lift, that might be preventing people going into physical businesses. There's going to be a mindset that lingers for a very long time, right? Some people are experiencing real trauma from this, right? And that kind of emotional trauma has a long-term impact on their buying behavior and how they spend their money and where they see value. So what you offer might need to be dramatically different, not just to get you through the next couple months, but it might change how your business looks for the next year or the next 2 years. So I want you to be thinking about that now. I don't want you to be figuring that out when everything opens up again and you have to scramble and basically start over from scratch. I want you to have a plan in place now. So again, it's all speculation. Nobody really knows when or how, but be thinking about your specific industry. How do you think it might change as a result of this? What can you do to compete in that new reality? The better that you can try to anticipate what that future reality is and understand it and figure out how to make money in it, the better off you'll be, right? And you can hit the ground running as soon as you have the opportunity to start selling to your customers again. So really try to spend your brain power and your energy on that future state as much as you possibly can. If you think of changes in buying psychology, people, if you're someone who typically charges a monthly retainer, that might be a harder sell in the future because people are afraid of committing to those monthly expenses. You might instead have better luck trying to sell a one-time upfront strategy fee, right? That might be a bigger fee than you would typically charge, but people are more willing to sign off on that. So be thinking of those types of changes that might impact how you sell to your customers. You might still get the same amount of total revenue, but the better you can sort of appreciate their emotional fears around money and commitment, the better you'll be able to profit from that. Constraint is the birth of innovation. So I want you to be thinking of not just your current market opportunity and thriving in what you know, but be looking for opportunities for disruption. So anytime there's this major shift in industries and shift in the economy, there's tremendous opportunities to make a lot of money. So put yourself in that mindset. I want you guys to be the ones making that money. Think of what is a new need that popped up that didn't exist before. I know this is a really silly example, but it's one that we can probably all relate to. Restaurants now are having curbside pickup where you pop your trunk. Like, not only is it curbside pickup, you pop your trunk and they throw food in there and you drive off. Wow, that's pretty awesome. What if they had been doing that all along? They would have been making a lot of money possibly, right? Or the take home and bake, right? Our favorite restaurants we normally would only eat in at are now offering an opportunity for us to take out food and bake it at home. What if that had been happening all along? Maybe they would have made tremendous money from that. So be thinking of things that you wouldn't have thought of without these types of constraints, but that maybe people would have always been willing to pay a lot of money for, or in the future, we think they'll be willing to pay a lot of money for. So look at ways to disrupt, right? Look at ways to disrupt the industry that you're in. Who is absent from the market? That's an opportunity to serve somebody new. Who is maybe combining offerings from different vendors into their own solution? This might be an opportunity to be a new aggregator and provide some add-on value. Consider the emotional needs and the pain points of your buyers in the future. That's where you find the most opportunity to profit. Again, I know it's hard to use our brain for this future state when we're worried about today, but we need to embrace today, control today as much as we can, and start thinking about the future, because that is what will help you really succeed in the long term. Number 4, don't disappear from your customers. As much as possible, stay in front of them. Even if you can't sell to them right now, even if you're competing for their dollars and you are not winning, stay in front of them so that when all of this lifts, you have the opportunity to reinforce your brand again. We don't want you to disappear entirely. So if they don't need what you're selling right now, try to partner with somebody who is selling what they do need, and at least have some brand recognition from that, right? Be a resource to them. If all you can do is be, a ray of sunshine in their inbox once a week and provide a little joke that makes them laugh, or a beautiful image that is some eye candy to, distract them for a couple minutes from what they're going through, that's great too. Whatever you can do to be sensitive to what they're going through, but also keep your relationship with them, that will be really important to help pull you through this. And obviously, if you are not a business that sells online, that needs to be a core competency for you going forward, whether we're in this circumstance or just in general. That's a trend that has always been around and will continue to be around, if not even stronger going forward. So learn ways to have an online presence. If you don't actually sell online, you can at least have more presence on your website. You can have a blog that can be monetized. There's ways to do all this, podcasts with sponsors, lots of ways to create money virtually that might not directly relate to the specific product that you sell in person if you're a retail store or a restaurant. Lastly, do not withdraw. This is a really trying time, and we need you to be present for yourself, most importantly, and your business needs you as well. So we need to figure out how to manage the stress that you're going through so that you can continue to be effective, happy and effective as much as possible, given the circumstances. So take care of your mental health needs, call people, call your colleagues, have video chat. I know I just realized I don't have my video on this whole time, so whoops, I'm not following my own rule here. So put the video on, connect with people. We're human beings and we need each other. So don't be afraid to do that. Don't exist through email for the next 2 months. Manage your stress. Know when you need to take a break from media. It's overly negative, I think, as we can all agree. Some of that is based on truth. Some of it is not. So learn how to separate the facts from the hype, especially if you're looking to make drastic cuts in your business. Make sure you're doing that based on as much knowledge and fact as you have, and not based on an emotional knee-jerk reaction or because you saw a terrible story in the news 5 minutes ago. Try to separate yourself from that as much as possible. Keep calm and keep working. This is really important. It will remind you that this is business as usual, meaning constantly changing. It's tough being an entrepreneur, right? You have things thrown at you left and right all the time. It is grueling, but we do it. We love it. We get through it. And this is another thing that you're going to get through. So keep working. This is business as usual for you. You all signed up for this, for better or worse, and you are succeeding at it, right? You've gotten this far. There's a reason why you're a business, right? So give yourself some credit and keep pushing through it. Completing projects will give you a sense of accomplishment and control. If we can do nothing else, keep working on the things that maybe have always been on your to-do list, but you've just never gotten to them. Get to them now. It makes you feel great, I promise. It might not change the world. It might not change your cash flow dramatically, but it will certainly change your mental state, which will give you the capacity to change your cash flow in the future. Keep connected to your business. The worst thing that can happen is people are so frustrated and they throw their hands up and they walk away from everything. This is the time to stay connected to your business. So keeping up with the projects that you want to work on, thinking about the future, creating plans for the future, keeps you confident about the tremendous value that you bring as a business owner. As I said, there's a reason why you're in business. You are doing something. People have given you their money before, right? You are doing something that nobody else can do in the way that you can do it. You are solving a need that nobody else has been able to solve. So appreciate that about your business. Don't fall out of love with your business. Stay in love with your business, with the value that you offer. And that, I promise, will help pull you through some of the tough days. Okay, so with that, I'm going to end it there. And I'm happy to go back to any slides that you'd like to go back to. We've got 20 minutes, so happy to review any content or happy to answer individual questions that you might have.
So Laura, and I'm going to keep everybody on mute just because we've got a lot of people on the call and
Sure.
that's going to be difficult. Laura, we've had quite a few questions, if you pop into the question and answer box, about the unemployment piece.
Yeah.
You know, can an LLC owner qualify for unemployment? If you're an independent contractor, can you qualify for unemployment? Are you able to speak to that, or do we need to kind of get some additional information for people?
Yes. So if you are a contractor, you absolutely can qualify for unemployment now. It's called pandemic unemployment. So let me go back to that slide because it's different from the traditional unemployment. So if you are a W-2 employee who lost your job, you would apply for the traditional unemployment through the EDD. If you are a contractor or a freelancer, you would not typically qualify, right? Because the first question they ask you is, who was your most recent employer and how much was your payroll? So you can't answer that question, right? So you wouldn't be able to qualify for the traditional unemployment. The CARES Act created this new category called pandemic unemployment, which means even if you were not a full-time employee or even a part-time W-2 employee, if you are a freelancer, if you're self-employed, you can qualify for pandemic unemployment. So it's a specific thing you need to apply for. The EDD does not have it up on their website yet, but they basically just have a message that says this is coming. We know that this is a new federal requirement and we're trying to get it up and running as quickly as possible. So stay tuned. That's really where we are today, is stay tuned. Get ready to have an application put together. You can create an account online with the EDD. And so as soon as you see the message that it's available to apply, you can just click apply. So I would encourage you to do that at the very least. Set up your account and be ready to apply for it. So just keep an eye out, keep watching the EDD website throughout the next couple days, and hopefully it'll be available very soon. The $600 amount, it's not clear yet whether everybody gets an automatic $600 or if it's based on previous income. So it could be up to 600, it could be exactly 600, we don't really know yet. So that's all to be determined, but that's really the benchmark that they're floating around.
The other thing to add about unemployment insurance, and I've put a little note here in the chat box, is the EDC, which is a small business development center down in Camarillo. They're putting on regular webinars, rather like WEV is, and they have one today at 12:30, which is going to be talking about unemployment insurance. Even if you can't make it at 12:30, then register, because you'll still be able to get a copy of that webinar, and I think there'll be some good information in there. So, okay, the next question that I'm seeing is service businesses. Are employees of 1099 employees? Other cost of goods are utilities, equipment rental, advertising, rent. Are all of these considered costs of goods?
So it would be the direct expenses related to producing that service. So really just the payroll or the 1099 contractors would be your cost of goods. And then any other, specific tangible supplies that you might spend in the process of delivering the service. But otherwise, if it's just the cost of running the overall business, like rent and insurance, that would be a fixed monthly expense.
Okay, and then a question from Anna. If you have employees, even if they only work 1 hour a week, can you not apply for unemployment?
Great question. So if they are technically an employee, they, even if they only work a certain number of hours a week, so there's lots of, I don't want to be an employment attorney here, but there's lots of discussion about what qualifies an employee and what qualifies a contractor. So, and California has just updated this in the last year or so. So check with your attorney for specific advice on this, on whether they were correctly classified. You can apply for unemployment. So if your employee took income from other sources as well, if you were not maybe their only job and they had some other sources that they got as a freelancer or contractor, they could apply for unemployment based on that income. Absolutely. It doesn't disqualify them if they took a couple hours of revenue or a couple hours of income from you as a business, as a part-time person. But you could certainly apply for the PPP, the payroll protection, for their payroll. As a business, you could apply for that.
Right. And for yourself working in a business as well.
Right.
Okay. Does a business owner, a partnership, qualify to apply for pandemic unemployment? And does this get reported on your credit rating?
It does not get reported on your credit rating. It does qualify as income. So if you receive unemployment, even if it's the pandemic unemployment, it does qualify as taxable income. So that's something to keep in mind. It's unclear at this stage. It's unclear whether a business owner can apply for that. So I'm basically telling everyone, just try it and see what happens, because as you probably have all noticed, anyone that's trying to serve clients in this environment, they are evolving the rules minute by minute, and they didn't really have all the detail available up front, right? So it's like, these are the benefits that we want to offer. Now we're pushing it down through the system, and now banks can receive applications, but banks still haven't received all of the criteria to approve the applications. So they're receiving them since Friday, but they don't really know how to approve them yet. So the government is rapidly trying to get as much guidance out as they possibly can for all this criteria. So my suggestion is get in line. Get your application in, and once the specific criteria comes out that either qualifies you or disqualifies you, you'll know. But it's certainly worth applying for. I would just try to get from whatever source you possibly can. So apply for the PPP. You can apply for pandemic unemployment. You can apply for the disaster relief loan on the SBA website. I would get one of each in, frankly, and see which one comes through first.
Yep, agreed. And we had a lawyer on the webinar last week, and she basically said the same thing. So I
So
think
hard.
we're
Everyone's pulling their hair out, right? They're trying to give the right answers to business owners
yeah,
who need it,
and
nobody has answers yet.
exactly. While there's still, there's so little money actually coming through that, yeah.
That's right. And I know that there's already talk of this wasn't enough. We need another stimulus package, but the likelihood of that coming quickly, who knows? We don't even know how long it's going to take to get the payroll protection funding out. And that's really what people need most urgently. So I would just try to apply for everything and see what happens.
So there's another question about which loan to apply for PPP versus, or which business to apply for a PPP or EIDL. Let's take that in kind of the next section. And it also may, you may get your answer during that presentation as well. Is there anything else, audience, that is relating to kind of managing cash flow, planning, your scenarios, anything that Laura can specifically address before we move on to the CARES Act?
There was a question at the very beginning, Nikki, that you mentioned the burn rate for monthly expenses. So just to add some more clarity for that question if needed. Basically, everyone should go through their bank accounts for the last 3 months and look at everything that came out of your bank account. That gives you a pretty good indication, unless you're a highly seasonal business, that gives you a pretty good indication of what your monthly expenses are. And think, what could I cut from this? What could I live without if I needed to? So dues and subs are where I go first, because those are usually just literally cash that's burned that you might not need, right? So that's a good place to start. Obviously contractors are probably going to get cut first, which is difficult, but instead of cutting altogether, maybe you can just reduce scope or negotiate, deferred payments as much as possible. But look at everything that goes out of your bank account for the last 3 months and figure out, can I live without this? Do I need to live without this today? Like, is it a huge expense for you? Is it a $10,000 monthly expense that will just cripple you? If so, you need to get rid of that pretty fast if you don't think you can cover it. So it has to do with how big of an impact it really has on your cash flow as well. So look at everything that came through your bank account and try to make sense of, do you need it to be able to continue to run your business, right? Like you need your employees to be able to continue selling, right? Most employees, if they were employees that maybe were unnecessary in the first place, then now we have this conversation of, maybe I could have improved my profit before all of this happened. Maybe I didn't need this amount of overhead. So that's kind of a separate conversation. But if we think of, what do I need to sell my product? What do I need to be in business? Maybe not to do it in the most efficient or streamlined way, but maybe we have to do things a little bit harder for a couple months. That's okay too. So go through everything that's coming out of your bank and cut what you can cut the easy things. And then everything else comes down to those scenario plans that we talked about. So having your base, best, and worst case and understanding what the cash flow looks like in each of those scenarios, then you have a sense of what of those fixed expenses you can cover in each of those scenarios and what might need to go.
And Laura, what would be a kind of as a rule of thumb to prioritize who you should be paying first?
I would call every vendor that you have as a first step and figure out what you can defer. Because if you can defer everything, then you really don't have to make any choices, right? If you're able to defer, you obviously still want to trim down, because even if you defer, you still come up to those expenses in 60 days, right? So, but first figure out what is the most urgent, right? Your employees have to be paid legally. They have to be paid, or else you have a legal issue, right? So employees have to be paid, but you have some protection against that with the deferral of payroll taxes if you can. So employees have to be paid first. Rent, try to defer that as much as possible. I think everybody is pretty much open to that at this point. It's really payroll. Other vendors you can probably get away with not paying. Another common strategy is to work out payment plans with each of your vendors. So maybe you can pay them, 1/3 of the bill every month instead of the full amount. Don't ignore people entirely. That's where you get into trouble and you lose the ability to negotiate plans. So if you really can't cover anything, call each of your vendors, try to defer. If they can't do a formal deferral, then you can work out a payment plan to pay a portion of it, right? Just to stay connected to the balance so that you're not looking like you're scamming somebody and completely avoiding it. that would be my recommendation. It's really case by case per business. So I can't say, you know, pay payroll, pay utilities, pay rent, and here's the order. It really depends on the relationships that you have with vendors, what you can have some wiggle room with. But employees always have to be first. That's really the only legal rule of thumb. After that, you know, what would be most detrimental to your business if it went away? Or you know, who's the most likely to come after you? That's really where you're looking at, is sort of a creditor obligation. So that's why you talk to everybody and figure out how much lenience can they give you. So it really is based on relationships, and there's no clear rule of thumb of every business should pay this, except for employees.
Great, thank you. I think we're kind of approaching a natural end to this particular section. Any last parting thoughts, Laura?
I don't think so. I know it's a really tough time, but I strongly encourage all of you to have confidence in yourselves. You have faced difficult times in your business before, and you will be able to get through this. There are resources to help. They might not be coming quickly, but they are there. So get all your applications in as much as you can, and watch your expenses, have plans in place. Planning is really what will help you navigate all of this, and stay positive. I really believe in all of you, and I know that you can get through this, and we're all here to help you. So I'm rooting for you guys. I know you're going to do just fine.
Great, agreed. Okay, thank you so much, Laura. I'm going to now move over to the part on. Hang on, sorry, technical difficulties. I just need to get the right screen. There we go. All right, everybody. Moving into the second half of this webinar now, and we're going to start talking about the CARES Act and the latest updates to that. Nope, that's the wrong one. Bear with me. Let's just start on this box. Hang on current slide. Yay! All right. Okay, so what I wanted to go through, I mean, we did talk about the CARES Act a couple of weeks ago, but my God, that has all changed, or a lot of it has certainly changed. This presents an opportunity for us to go over what some of the latest updates are, and to the EIDL, and also to the Paycheck Protection Program, which didn't even exist the last time we focused on this type of webinar. So, and I also really want to give you the opportunity to share experiences and questions, because frankly, you are on the front lines of this, and you're dealing firsthand with these application processes, and in a lot of instances we're getting our information from you in terms of, you know, kind of what's really happening out there. We're receiving information from on high, from the SBA, from WBC network, from small business, majority and small business associations nationally, but you know, to be honest, there's a lot of conflicting information still. So really, this is a sort of crowdsourcing opportunity to share some information, as well as me just going over some of the kind of factual aspects of it as well. All right, so let's start with the SBA Economic Injury Disaster Loan, the EIDL. This is a loan that is funded directly by the SBA. It's specifically, in the past, it's in the instances of, you know, natural disasters for what's called economic injury. So where you have, you know, where your business is suffering financially due to circumstances beyond your control. This all changed during COVID. They relaxed a lot of the parameters from the old EIDL and have kind of opened up this loan. If you go onto the SBA website now, this is actually called the EIDL Advance. There are, I think, 4 options on their COVID response page. And the EIDL loan folds into the EIDL advance, because what they're now doing is allegedly sending a up to $10,000 advance on that loan, which is not repayable. So just to confusion there, the EIDL is the EIDL advance on the SBA website. You apply online, and it's an abbreviated application now. The SBA will come back for more detailed information from you, but the initial application is very quick. Takes about 10 minutes from what I've heard. Now, if you applied for the EIDL before 3/27, you will need to apply again. I think, if you were applying kind of in the early days of this situation, the SBA website was crashing, you were kind of having to upload documents onto Dropbox, and then it all just completely changed, and now we're back to an online streamlined application. So even if you did apply before 3/27, you will need to apply again. You'll get a new confirmation number. What I'm interested in, I'm just going to have a look in the chat box quickly, is if anybody has actually received, there we go, the $10,000 yet. So I'm really keen if anybody applied for the EIDL and has received funds yet. That's kind of the big unknown. And we've dealt with a lot of clients that applied for the EIDL and have not had anything. I think originally they were hoping to get something out within 3 days of submitting an application, but that doesn't seem to be holding. So we're waiting again. I've heard 2 to 3 weeks. I've heard 3 to 4 weeks. Again, it's just one of these situations that we don't know the reality until it actually happens. So just to go over what the EIDL can be used for. Actually, and let me just explain a little bit more about the advance piece. So again, in theory, the advance is something that you would not have to pay back, even if you decided not to go through with taking the loan. As I said, you can apply for these loans and you can take it all the way up to the point of them being about to fund you and then decide that you don't want to go ahead. So with the EIDL, my understanding is that you will receive the advance and then you would not necessarily have to go through with drawing down the loan after that point. The EIDL is specifically addressing replacing working capital. So it's not replacing lost income or lost sales. It is money that is to be used to cover your essential overhead expenses, your payroll, your utilities. And I do want to make that point. I think a lot of people apply for this loan thinking that it will kind of make them right. In these situations, it doesn't. The idea is that they will calculate a loan amount that would equate to approximately 6 months of your working capital needs. And that would be based on your previous year's financials. We talked about the no obligation to take the loan. Non-profits are eligible to apply for this loan, as are sole practitioners and independent contractors. Again, the parameters changed for the EIDL. So once the SBA reaches back out to you, in theory, they will want you to kind of build out that application information in a lot more detail with a personal financial statement, detailing your personal assets and liabilities, schedule of liabilities, potentially a listing of amounts that you owe to creditors, monthly sales, and also your tax records. Again, this information is based on what the economic injury disaster loan used to require of its applicants. We're anticipating that it will be similar, but again, we haven't heard of what the actual requests are going to be for. Obviously, information like your latest financials is going to be important. If you can have those ready, your year-end 2019 financial statements from perhaps your QuickBooks, or if your accountant has prepared those, they won't be needing to see 2019 tax returns because you don't have to legally file those yet. So you have until July 15th. But they will be looking potentially at 2018 and 2017 tax filings. If you can quantify the economic impact so far of this outbreak, and put some narrative around how you have been impacted, again, that will help when the SBA come to fill out the detail of your application. And similarly, if you have any budget information for 2020, a reforecast for 2020, it's really you providing sufficient detail to, again, to tell your story. And as I mentioned, the parameters have been relaxed in comparison to what we had previously seen with the wildfires, which is great. Again, in theory. So we're waiting to see what the actuals will be. They are making a determination based on credit scores. And as far as we know, the collateral guarantee that was previously needed for loans above 25,000 is not needed in this instance. However, if you have failed to file tax returns in the past, if you have tax liens with the IRS, and you haven't negotiated a payment plan with them, if you are defaulting on any federal loans, student loans or child support, and if you have declared bankruptcy within the last couple of years, that may preclude you from being successful. Again, I would argue your case with the SBA if you do fall into any of these categories. It's a great loan. It's 3.75% over 30 years, which means that your monthly payments will be very low. And again, that's if you decide to go ahead and take the loan. So let me just jump into some of the questions. So only the streamlined application is available now. The streamlined application is the first step. So yes, that's the only way to kind of begin your process for this type of loan. But our understanding is that you will be required to fill in more detail down the line. If you have an open line of credit for your business, will that be a negative when applying for these disaster loans? No. This is one thing that they have definitely waived is the fact that you have credit available elsewhere. That is not a precluding factor. Okay, if you were laid off in December 2019 and want to start your own business, are there any loans that you can apply for to get a business started? Yes, but they wouldn't. We're not covering that in this particular webinar. The issue right now with getting a startup loan, well, actually with a 7A lender, you may be able to, I think, but the issue generally, like right now, is that the lenders are just so swamped with these PPP applications or with their own kind of disaster response loans. It may be tricky, this week and next week, but at some point, yes, you'll be able to apply for a startup loan. And we'd recommend, trying to find, even circling back with WEV, in 2 to 4 weeks time. Right now, I know that we're not handling any other loan applications other than our own quick response loan, simply because of the demand on our team. I had applied to the SBA for a previous disaster loan and was told I didn't qualify as a farm. Yeah, unfortunately, this Eid L is not available to farms. If you have another business that isn't a farming business, then apply through that business. And let me just look on the chat. If anybody wants to share their experiences on chat. So people who have applied 331 and haven't received anything, applied 3 times and no funds yet. Hopefully that's not 3 times with the same business. I think there's a before and after that was allowed before the 27th and after the 27th. Nothing yet, nothing yet, nothing yet. Should we put in multiple applications? I wouldn't advocate putting in multiple applications. That being said, there was the before and after. I mean, I don't know if they, you know, just kind of wiped all of the applications that were received before 327. You know, the point really to make here is that you don't want to be drawing down more than 1 loan. I think that's the issue. When applying for the EIDL, I was not sure what numbers needed to be reported and overstated my expense, cost of goods numbers. Should I reapply or wait to correct during the next step? I would wait to correct, and if you have a confirmation number, you can email I think it's on the screen now, the disaster customer service, referencing your confirmation number and the fact that you have additional information to provide. Can the EIDL be used for business improvements? No, it can only be used for existing overhead. It cannot be used for expansion. All right, so I'm going to move on now, I think. What about using loans to create new product services? Yeah, so I just addressed that. The EIDL can only be used for existing working capital. PPP, we will talk about in a second. I received the WEV quick response loan. Is that going to affect my chances for more funds through the EIDL loan? In brief, I think the answer to that is no. We are encouraging people to try and refinance. If you get a quick response loan, you may be able to refinance it or roll it into a PPP, because that would be forgivable. And the WEV quick response loan is not forgivable. To our understanding, receiving the quick response loan should not preclude you from getting the EIDL loan. But I will say that this is uncharted territory, so I don't want to say that that answer is definitive. When applying for EIDL, do I use my IEN on my S Corp or my Social Security, which is what I use for my other business? That's a good question. I think I'm gonna answer that offline, just because my brain is trying to respond quickly to these things, and I think I need a little more information in order to be able to answer that question correctly and in more detail. Facilities maintenance and repairs, can the EIDL be used for that? Yes, I mean, if you have a say a property business with tenants, then ongoing maintenance and repairs is part of your ongoing business expenses. So the EIDL would certainly be applicable in that scenario. What is a quick response loan? Great question. So the quick response loan is a loan that we implemented at the beginning of our COVID response. It is up to $10,000. It is 0.5% rate. The first 3 months repayments are deferred, and the loan term is approximately 36 months. You can find more information on our website, and I'll be bringing that information up at the end. Some organizations like ours implemented these kinds of loans as a sort of quick stopgap for people while they're waiting for federal loans to come online. So we've had a very high response to that loan. So yeah, if you're interested, you can find more information on our website about that. Okay, I'm going to move on now to PPP. Actually, no, I'm not. I'm going to go back and just check in the chat box and see if there were any early questions about the EIDL. Bear with me. Okay. Sorry, I on Zoom, sometimes when you're sharing a screen, it can be really hard to bring up these other boxes. There we go. All right, so I'm just going back up to earlier in the webinar, and I know I've been putting in some Eid L questions there. Oh, so this was a question that came in actually before the webinar. Can an LLC use the PPP? Oh, sorry, that's about the PPP. So what can the EIDL be used for? It talks about working capital, and that could include your existing loan payments if you already have loans for your business, ongoing insurance and utilities. So that's what the EIDL is really addressing. The PPP is definitely more focused on wages and salaries, and we will get into that. So I'm just quickly scrolling down to see if there's anything else about EIDL. I'm in the process of moving my business to a new location and will have construction costs. Can I use the funding to cover construction costs? That's a really, really good question. I think my answer to that is I don't know, but we can try and find out. In the spirit of the EIDL, it would be looking at your expenses in 2019. If you had construction costs relating to these new premises in 2019, then that would, reasonably be included in the EIDL. If it's very recent, then it may not be. So that might be one for us to take offline and try and find out that way. Okay, so I'm going to move on now to the PPP. The PPP is also part of the CARES Act. It is the Paycheck Protection Program. And the spirit behind the PPP was to enable organizations, companies, businesses, sole proprietors to keep employees on payroll and to keep paying yourself as a business owner. So that's really, I think it's important to kind of bear in mind what the spirit of the PPP is all about. The way it's calculated is that you take the average monthly payroll for your organization, and if you don't have a formal payroll but you still pay yourself out of the business, then that also applies. So you are, drawing from the business each month. They're looking at a period, a sort of comparable period in 2019, and figuring out what your average monthly is. You can borrow 2.5 times that amount. And it is up to 75% of that loan will be forgivable if you use it for payroll related costs in the 8 weeks after receiving the loan. So say you apply now, you get funded in 4 weeks time, so that would be May the 8th. And as long as you use the funds between May the 8th and July the 8th to pay for payroll, wages, salaries, health insurance benefits, then that amount would not need to be paid back. And I also believe that they will include some mortgage and rent, that the loan can be used for that amount too, but that portion may not be forgivable. So the question that we get asked an awful lot is, can I apply for both the EIDL and the PPP? The answer is yes, because they can potentially be used for different types of expenses within your business. Where there may be an issue is where there will be an issue, frankly, is if you try and use both sources of funding to pay for the same thing, i.e. if you use the EIDL, pay for payroll, and you use the PPP to pay for payroll, that is what is considered double dipping. Double dipping, I just explained. So you can't use both sources of funding to pay for the same thing. But where the difference is, so the EIDL can be used for your non-payroll costs and the PPP can be used for your payroll costs. So in terms of how do you calculate the amount that you should apply for on the PPP, you take your 2019 figures, divide it by 12 to get an average monthly, and then you apply for 2.5 times that amount. Now, what I will say is that every business is different. What constitutes, payroll costs in one business may not in another business. Some businesses will include health benefits. Some businesses don't have those. So what I strongly recommend is that you go to a site like the one that's listed here, and you can use the calculator to try and guesstimate or estimate what your amount is. It's very broad in terms of the description right now, and I think it's the case that you're going to just need to look at your own numbers and your own payroll figures based on the guidelines that are issued. And what counts as payroll costs, the second half of that screen, that is directly taken from the wording in the CARES Act. We don't have any more information than that right now. And I know that for, especially for sole proprietors, and especially for businesses that employ 1099 contractors, that doesn't really provide enough detail. It's something that we're working on getting more information for you, and it's one of these instances, keep checking back with us on the WEV website, on the WEV COVID response page, because we may be able to have more detail at that point. But unfortunately, the wording that we have right now is pretty limited. All right, so probably the burning question on everybody's lips is, where do I apply for PPP? In theory, with an SBA approved 7A lender, and most, if not all, big banks are SBA approved lenders. However, a lot of these banks have already said that they've reached their cap on taking new applications. So it may be that you need to dig a little deeper to find another potential lender. What I will say, and this is information that is totally new, and I don't even know that it has gone public yet, but we have a contact at Wells Fargo, is that Wells Fargo are going to be reopening their PPP portal. And I know Wells Fargo are one of the ones that closed extremely, I think even the same day last Friday, and had reached their limit. Now, just in terms of the numbers that we're talking about, Wells Fargo had to cap at $10 billion worth of applications. So they're not shutting up shop lightly, but as a bank, as a business, they have their own restrictions in terms of how much capital they can lend at any one time. And so that is why you'll see banks just stopping, because, legally, from a legal standpoint, they are not able to go beyond a legal lending limit. In those situations, we're encouraging people to go on to the SBA PPP website, and there's a button on that screen where it says find a lender. You will be able to plug in your zip code and it'll just pop up a list. And unfortunately, it's a question of going down and contacting those lenders or going onto their webpage and seeing, what the parameters are and if they're lending to new account holders if you don't have an existing account. I do have some links on the next page. This is something that is a very fluid situation, and given the fact that so many small businesses are having issues with getting their PPP application in, we're hopeful that banks like Wells Fargo or other big banks will be able to kind of reopen their portals. The other issue, it may not be a capital maximization issue, it may just simply be that they have they're overwhelmed, and so they just need time to kind of get their processes in place, get more staff hired, before they can reopen it and start taking more applications. So it's definitely a question of persistence, persistence with your bank and persistence with trying to find alternate lenders. Some resources that we did hear about, and I do want to stress that these are not vetted, we're not recommending, it's just, this is information that I wanted to share with you as of, you know, late last night and early this morning. These are other lenders that may be taking new clients. Fountainhead is a lending organization. It's an SBA approved. Obviously, all these are SBA approved lenders, so they are regulated. They are in Florida. They may take non-account holders or new account holders. In state, California Bank and Trust was one that was mentioned to us a couple of days ago. I understand that they may have closed their portal for the moment, but that they may have a wait list. And the other one I want to offer to you is P3 loans is, it's almost like a clearinghouse. I think you will submit your application and they will basically go and find a lender for you. Just, you know, this is a kind of caveat emptor, let the buyer beware here. We're not recommending these necessarily. It's just information that we can provide to you that you can do your own research on. What I would stress is in the case of somebody like a broker or in any situation with the PPP, there is never to be a fee payable to anybody for finding a lender for you or you know, submitting an application on your behalf. All right, so I'm going to scroll back up to the beginning of the chat because I know that we had some PPP questions right at the beginning. Is the money going to run out if we don't submit applications? I don't have a clear answer on that. In theory, the PPP is open until the 30th of June for submissions, but as we've seen, many of the lenders are already reaching their capital lending limit. It may be that as this starts to happen, more loan capital is kind of pushed down to smaller, lesser known lenders. I can't say. We've answered the point about banks coming online with PPP. Many of them are open, but they've had to just either temporarily or permanently close their portals. Just scrolling down, if there's anything PPP specific. Okay, I'm going to jump over to the questions again now. All right, so deadline for finding the PPP. In theory, the 30th of June. In practice, try and find a lender sooner rather than later. What if you haven't paid employees yet during the closure? Can I go back or still be considered moving forward? My understanding with the PPP is that it gets backdated to February the 15th. So you could use the funds anytime between February the 15th and June the 30th to make payroll payments, and that would constitute a forgivable part of the loan. I've had different experiences, responses from banks about the guidelines. Is there any information about these guidelines being sent to the same across the banks? Yeah, so there is a standardized set of guidelines that has been issued by the Treasury. Banks may have some supplementary questions because it is, you know, they're the ones that are lending the money, but there are standardized guidelines that have been issued, and there is a standardized application that has been issued. We can send you an example of that application and the guidelines for borrowers and for lenders after this webinar, so you can see the information that was actually issued by the government. Should I apply for PPP through multiple banks? Okay, the answer to that question is you can only draw down one PPP loan per EIN number. If you have multiple businesses with different EIN numbers, then you can apply for, different PPPs for each business. If you're talking about applying to multiple banks for the same loan product for the same business, I think I gave an answer earlier on the chat. If you're hedging your bets in terms of, I've managed to get in an application here, I know this is open, I'm in a wait list here. I think you need to use caution. You can only draw down one set of funds. I think, the point is you can't apply for this loan with lots of different, or you can't receive the funds from different organizations. You can only take one PPP loan. If you want to pull your application from a bank before you get the funds, I can't see there any reason for that not to happen. That being said, that's something that I'd like to research a little bit more in detail. Is it recommended that borrowers seek out banks they do not have relationships with? Well, yes, if your own bank is, for whatever reason, not lending the PPP, then yes, you do need to do some research and find other lenders. I heard from several business owners that have had success doing this. It's a question of persistence, unfortunately. And WEV will try and share as regularly as possible where we hear about other lenders taking new clients for the PPP. But, the information changes so fast. California Bank and Trust, 2 days ago was taking applications, now they may not be. It's kind of up to you as an individual business owner to do your research on this, because the information that we provide may become inaccurate very quickly. For a PPP, if I pay a CPA or attorney out to fill out the application, can this cost be built into the application as it is an extraordinary expense? Oh, I want to answer that offline. I don't know the answer to that in this moment. Payroll payments I am making not after I submitted my PPP. Payroll I'm making not after I submitted my PPP application count for the 8 weeks using the funds for payroll. I don't actually understand the question. If you want to retype it, I am not understanding it as it's currently phrased. Okay, I'm just going to go back into the chat. PPP apps are online only according to my bank. I was told to go in. Actually, I think it depends which bank you're dealing with. I think a lot of the banks are trying to do it on, but I wouldn't say that that's universal. I think check with your own bank. How much does this application affect the business owner's personal credit rating? I think that was answered by Laura in the previous section. And we put in multiple apps. Sorry, just scrolling down the chat. Should we feel we are behind the curve? No, you're not. For all of these, just, get applications in now or as soon as you can. With the Eid L, we saw that changed a couple of weeks ago. Everybody had to resubmit, so nothing was lost then. In theory, the Eid L is open through the 31st of December of this year. So no, you're not behind the curve. I would encourage you to submit applications now, in the next few days, as soon as you can. Where do you go to get up-to-date information? That's a really important question. you need to find kind of your trusted information sources. And, I hope that you will consider WEV a trusted information source. The EDC that I mentioned before, I would consider a trusted information source. Score, chambers of commerce, your friend down the street may have your best intentions, but that may not be a trusted information source. I mean, I can't speak to that. Again, it's something that you will find for yourself, your accountants, your professional advisors. And it's a question of just checking often and checking regularly, because everybody is in a very fluid situation in terms of the information that is being made available. Even in terms of what's coming down from the SBA, there are updates every several days of where tweaks are being made or clarifications are being made. So I just encourage you to kind of find, 2 or 3 information sources that you resonate with, and check back with those, if daily or at least several times a week. We're going to give you the links to our website in a second. I just do want to touch on what I've brought up here on this screen. We know that it's confusing. It is confusing. It's confusing for us. The webinar that is posted here, and you will be getting a copy of these slides, and this webinar is being recorded, so you can replay certain parts of it that you're more interested in. The webinar that Cameo gave yesterday was really, really useful in terms of the types of questions that they were answering from small business owners, and the detail that they went into. So I would encourage you to watch that one. The Forbes article will go into detail on how to calculate your PPP loan amount that you should be applying for. The SBA site is where kind of the official information is being posted. And that's also being updated on a regular basis. We've talked about questions and experiences. We've talked about the fluidity of this situation. I do want to touch on this whole aspect of lobbying and advocating. I didn't put the link up here, but maybe I'll type it in. The Small Business Majority is an organization that lobbies for small business owners, and they actually invite, comment, and they want to speak to as many small business owners as possible to gauge the experience that you're having and the challenges that you're having, so that they can bring it up to the SBA at a federal level, to senators and Congress at a federal level, so that your voice can be heard. So I'd really encourage you to check out their website, and that has now been posted into the chat box. If you feel very strongly about everything that you're facing and going through, and feel like you need to vent to somebody who will hear you and who will listen. So I do want to mention that. And in terms of resources, here is WEV's COVID page. There's the EDC COVID page. Your Score and Cameo resources. So again, encourage you to check back with those on a regular basis. Okay, so I'll just dive back into the chat for a little bit longer. I just tried to submit PPP application at Cal Bank Trust, and they're only taking apps for current bank customers, right? So that is today's message. Tomorrow they may reopen the portal. On Friday they may reopen. It's a situation of you just keep checking back with these banks until you are successful. Okay, I'm just going to go back onto the question and answers. Can you use the Eid L for CC debt on your card? On your credit cards? I'm not going to give a public answer to that. I think, if the money that you get from the Eid L has been calculated to a certain level of reimbursing your overheads, then how you pay for those overheads is your own discretion. I applied for PPP with one of the out-of-state online applications, which was remarkably easy and straightforward. But now I'm concerned that I won't have a way to check in on the status since it wasn't with my local bank or a bank I have a relationship with. Is there a universal way to check on PPP status? That's a really, really good question, and one I don't know the answer to. I suspect that it's something you would need to check back with the lender that you applied with. If there's an email address, a customer service address, a customer service number on that website. Otherwise, there's, to my knowledge, that because the SBA is using intermediaries to make these loans, it's not like the SBA has a centralized system where they're tracking the PPP applications. So I just encourage you to go back to that lender and see if there are customer service numbers, with the caveat that they are very overwhelmed right now, and it may just take some time to get a response. Is Montecito Bank and Trust going to continue processing new PPP applications? I have no idea. I think you just need to check back on their website on a regular basis. The Wells Fargo information that I just gave you is literally, I don't even think that that is on their website yet. That just came through somebody that we have a business relationship with there. Will the payroll payments I'm making now, after I submitted my PPP application, count for the 8 weeks that I have to use the funds for payroll? Yes, because I believe that it can be backdated to February the 15th. You may be able to find more detail on that answer on the SBA PPP website and in the information that I'll send afterwards about the guidance material. Who do we check with for our EIDL, our bank? Okay, so let me just clarify there. The EIDL is the loan that comes through the SBA directly. Your bank will not have any knowledge of your EIDL. The banks are only dealing with the PPP. If you have an EIDL confirmation number, you'll need to go back through the SBA phone or their email to find out status. But I don't know if they're answering status inquiries through the SBA right now. Deadline for filing the PPP is the 30th of June, but we encourage you to file sooner. Okay, I'm just seeing if there's anything else. If you have a question and I haven't answered it, can you type it into the question and answer box now? Because I feel like we're kind of reaching the end. And I don't want to miss anybody. And if I'm not able to answer online, then what we do is we're taking screenshots of all the questions that are submitted, and we'll follow up with you afterwards. Or you can email me afterwards, and I realize that I haven't given you my email address. Parr@weveonline.org. I'm now pasting that into the chat box. Okay, I'm just scrolling back down. Right. Okay, I have two different businesses, a law firm with employees that operates as an S Corp, and a rental property / Airbnb that operates as a sole proprietor. I applied for the PPP loan for the S Corp with employees using the EIN. Yep, correct. What loan can I apply for the rental property Airbnb? Yes, use your Social Security as a sole prop to apply for the EIDL through the SBA for the rental property business. And that makes sense because the expenses that you will have in that business are not predominantly payroll expenses. They will be property maintenance and as utilities, lease, or mortgage, and that will be more in kind with the type of overhead that the EIDL will fund. So I think you're safe to do, and hopefully that answers your question. Would the small business majority be a good place for small businesses to report instances of different guidelines being applied by the banks? Yes, that would be an excellent place. Small business majority and Cameo, I think, would be very interested in hearing about that. So the COVID application link that was added to the chat is for which loan? The COVID application, okay, so that is for COVID-19 relief.sba.gov. That will take you to the SBA Eid L loan advance application, which will take you to the Eid L loan application. As I said, the PPP is something that you would do through your bank or another approved lender. All right, everybody, I'm sure your heads are all spinning. Luckily, we will have this available to you to watch again and to also kind of go through some of the slide information in some more detail. Oh, I just got some late questions. Okay, let me go back to the questions. If PPP is forgivable for payroll, why are they offering loans for 2.5 times payroll? It's just a cap that they have put on the loan amount to take people through to the 30th of June in theory. I can't speak to why they gave that deadline. It's maybe a best case scenario of when some of the stay-at-home restrictions will be lifted and you know, things can go back to some sense of regular operating. That is just something that was put in the CARES Act. I think, you know, frankly, if you think about the size of the numbers that the billions and billions, I think it was $349 billion that the CARES Act covered in this first wave of funding. The numbers just get extraordinary. I mean, 349 billion is extraordinary, but there has to be a limit to it. And I think that's why they have capped it at the 2.5 months of payroll. When and how will we hear back about the EIDL after application? That's a great question. And if it's anything like the disaster loans in the past, then the SBA will send you an email. They will reference your confirmation number in that email, and they will request further information from you. So hopefully by email. In fact, let's just touch on that quickly. Just on the subject of kind of scams that are out there, you should not respond to any requests by phone to give out, you know, any kind of information about your social security number, your EIN number, to somebody that you have not verified the identity of. I know that's stating the obvious, but you know, at this time, there are people that will take advantage of this situation and try and get information from you. So let's just have that. How long should we wait to hear about our EIDL? Unfortunately, I can't answer that question. I have heard that people are being funded that applied 2 weeks ago or 10 days ago, which would have been the start of the sort of revised application. But frankly, that's not confirmed information. It could be 2 weeks, it could be 4 weeks. We don't have that information clearly. We're a sole proprietorship with no employees. I'm calculating our net income from last year as we do not have payroll for ourselves. Does cost of goods sold cover everything that was not a personal expense of ours, including equipment purchases, business debt payments, business meals? No, cost of goods sold is something that directly relates to a product or a service that you're providing. And if I'm not answering that clearly, then can you email me offline and I'll address that for you then. I would say that the things that you described there are more in the overhead side of things rather than direct cost of goods. Can I apply for 2 Eid L loans? One using my S Corp IEN for business expenses and another using my SS for rental business. I feel like I addressed that question. And the answer was yes, if they are 2 different businesses and you're using a different EIN or Social Security, if it's a sole proprietorship, then yes, you can apply for those 2 different businesses. Okay, everybody. I think we're done, and maybe I was answering questions that had already been answered. So I think we'll call it a day there. And I know this is a lot of information. I encourage you to kind of, again, just go through things at your leisure and sort of take the time to go through it. And just contact us if you have any specific questions after this. On a lighter note, next week, we'll hopefully be moving over to something more constructive, proactive, creative, talking about your brand identity and strengthening your online brand presence. So information about those webinars will be posted on our COVID website. By signing up for or attending this webinar, you should now be on our email list. So you'll automatically get sent an email that will invite you to register for next week's webinar. And I do think we may have information online about that already. So wishing you all the best, and thank you so much for being on our webinar today. And yeah, take care, stay in touch, and stay informed. Okay, bye.